Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at mainly three things. Firstly, I'm going to be looking at the 60-day cycles that I've been talking about over many videos now. And I'm going to be looking at the possibilities and the probabilities going forward in the next few months over here. Secondly, I'll be looking at the volume and the repercussions of what this really means in terms of the price action going on over here. And finally, I'm going to be having a look at the two critical levels which now Bitcoin has to decide in terms of the direction it wants to go. And as per the title of the video, will we go to the 18,000 from its current levels, or will we make our way down to the 12,000 which everybody seems to be expecting? Okay, so if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get in the mood for Bitcoin. Okay, so we're going to start off on the daily chart, and these are the last 3 or 4 cycles that we've had. So starting from this low point here on the 12th of May, we made a 62-day low over here, after which we went on the mid-cycle high over here and then came back into the 60-day low cycle to this point over here. So with this cycle, we bottomed out on day 56. And as I've shown you before on this one, if we look closely, on the 56-day low here, we tried to make a rally, but it only lasted 6 days up to this point here at 22,800. And this became what we call a left translated cycle, i.e. from the midpoint of the next 60 days, it actually topped out before the midpoint of the 30 days. So when it tops out before the 30 days, it's a left translated cycle. And if it topped out after the 30 days, let's say over here, if it had topped out over here and then came down, that would have been a right translated cycle. And that's usually bullish. And this is a sign that we would look for in terms of a reversal from the bear market trend that we've had over here. However, this top here, a left translated cycle, was playing out very, very well with this rising demand over here, culminating in this top, and we would have expected this to continue up here. So this would have been the 60-day cycle low over here at around about 20,000. However, with the FTX bringing the market all the way down here, it looks, for all intents and purposes, that we've now bottomed out on day 63 at 15,500. So since we prematurely bottomed out over here at 17.5, it's taken around about 144 days to make the next low over here. So this consolidation that we got over here has taken about 2.5 cycles. And we needed to create this consolidation in order for us to have a proper reversal at the bottom of this dominant trend that we've had since November 2021. So the question now is that we need to build another base now. Having built it up here, we now need to build another base over here before we can really get out of this bear market trend to end this bear market since 2021. And the question on everybody's lips is that, are we going to make another low down to the $12,000 mark, or are we going to sustain this new low that we've just had at 15.5? And we'll have a look at a few things to see whether this is more likely to hold, or is this more likely to go down to the 12,000 mark. From what I can see here is that it may take another 2 cycles at least of consolidation over here before we end this bear market trend and have a reversal back to the upside by breaking this neckline over here, which is at 18,200. And I'll have a look at that later on. And the reason why I'm thinking that we need a period of consolidation over here is to do with the reason for the fall that we had at this point with the FTX collapse, because people are in a very angry mood. I've been looking at a lot of YouTube channels covering the Bitcoin, and judging by the comments in this section, there's a lot of people very angry, very frustrated, very irritated. A lot of people have left this space. Those who are left are feeling in a very helpless and very angry mood at the moment. And you can see why. And this is something very, very important as part of the psychology of the market. If we have a look at the Wall Street cheat sheet, which I've shown you many times in the past, you can see that at the bottom here of every bear market, once we've had this dominant trend to the downside, we get to this phase here, the final phase, before either a capitulation to the bottom side i.e. creating a new lower low, and then on our way back up again for the next bull market cycle. When we look at this bottom here, there's a lot of anger, as you can see here. We've had the capitulation, we've had people panicking, bringing the market down, and these are the classical questions people ask at the bottom of these markets, which is exactly what's happening now, and that is, who shorted the market? Well, we've had the FTX scandal. That's the big problem. Everybody's got out of the market, everybody's sold off, and everybody's now asking for regulation, and hence this, why did the government allow this to happen? So these are the questions you usually get at the bottom of this market. When we zoom out and have a look at this, we can see that the smartest investors are those who are going to be getting in at these levels here. Either we make a new bottom here, equivalent to our 12,000, before we take a big move to the upside. But then you've got to be very careful here, because when we do have this run up as a prelude to the big Bitcoin bull market, this is what's going to happen like before. This is going to be filled with disbelief, because people are going to think, just like over here, when they got caught out at these points, they're going to say, well, no, it came down here, it came down here. So therefore, when we get to this point, they're going to think it's going to come back down here to these levels again. But this time it won't do that, and that's what we've got to be very careful of. So after the FTX debacle over here, people have become very, very disheartened, and what we do need here is a period of consolidation, because people are in fear mode as well as anger mode, and we don't know what the contagion of the FTX will be, and that'll play out in the next few weeks in terms of how many people have been affected by it. That's what contagion means. How many people were tied into the FTX, and what harmful effects of the FTX fall will have on the other exchanges, on the institutional investors and the large individual investors, because it takes liquidity out of the market, and all that's going to do is to play out in this next few cycles over here. And the thing that we've got to be very careful of here, because we are really at the end game when it comes to the bear market here, and that could take maybe 2 months or 3 months yet. When we do make ourselves out of this range over here, at this point, when we've come out of this, people will be not believing that this is a proper rally, that's the start of the bull market. They will be expecting the market to do this, because this is what it's done time and time and time again. And the market imprints into our minds this pattern, and that will be the one that catches us out. And this is where we really need to hold our nerve to keep going to the upside. Yes, it can come down a little bit, because obviously there are levels down here and there will be corrections along the way. But the general long-term trend over here will be to the upside. So if we call the next cycles from here, this is the possibility and the probability. Now, this cycle, this next 60-day cycle that we're in now, from this point at the bottom of 15.5, which was made on the 9th of November, then the next 60-day cycle roughly will be around about the 8th of January, and the second one will be around the 9th of March. So these two cycles now become very critical over here. And in this cycle, we will know whether we're going to go lower here or whether we're going to actually clear some levels over here around the 18,000. So what you can see is that if we have bottomed out at the 15.5, as part of this 60-day cycle, the midpoint will be about 30 days. So in this midpoint between these two cycles, we can expect a move to the upside like this, to possibly all the way up to the 18,000 over here, before we make a downturn for the next cycle low around here, around the 8th of January over here. And if we can do that, if we can bottom out on a higher low over here, that would suggest that we have bottomed out over here, and then we'd be waiting for the next run in the next 60-day cycle, either back up to the 18 or even breaking it above the 21,400 over here. So in the following cycle, if we have bottomed out at the 15.5, you could see something which is then creating a higher high and a higher low to get to these levels over here. And this would leave people behind thinking that we're going to go to much lower levels, to these $12,000 marks here. And this is what market has done in the past. And this will have created our double bottom over here for the start of this bull market over here. But if 15,500 isn't the low in this market, so we could well come back up here, retest the 15.5, get people excited over here, and then capitulate into this 60-day cycle low over here at the $12,000 mark before making a quick turnaround back up to these levels again. So we'll just have to wait and see, but these are the possibilities. It does look on balance of probabilities that with a higher likelihood, now that we've made our way down from these levels over here to the new low of the 15.5, it does look like that this is more like the scenario on balance that's going to be played out. Okay, so we'll just have to wait and see. I want to next have a look at the volume and how that's playing out and what it really means. Now, normally, bottoms of the markets and the tops of the markets are usually signaled by big capitulation and blow off tops. So as you can see, back in 2018, up here, we had massive volumes, which was a signal that the market has now topped out. And at the bottom here, the capitulations here and the capitulations over here, these are usually signals that we've either topped out or bottomed out, depending on where we are in the market. The interesting thing with the current cycle is that we did have a blow off top similarly to over here, but not the type of blow off top everybody was expecting. And when we came back up here, we expected to go further because there was no big candles of volume over here. And that caught everybody out. But in the current situation with the FTX causing this big red candle over here, we have had a capitulation, and that usually would mark a very good end to a bottom of a very strong trend to the downside here, as we did over here as well, and over here and previously as well. The only thing I would add here is that we don't still know all the bad effects of the FTX fallout, and that may play out in the next few days and weeks, but I wouldn't expect another capitulation unless we have another exchange going down or another big massive event like the FTX took here in the next few weeks. So what we have here on the daily chart is a 200 daily moving average, which is pointing to the downward direction here. And the reason why that's important and why it's going to affect this price action over here is that if we look back in history, we can see that when we topped out at 69, it came as support all along this line over here. And when we broke that support, we came back, retested it and got rejected. And since then, we've been on this downward path over here. So while in a longer term, we've been consolidating over here, the chances are, the higher probability is that we're going to come and meet this somewhere along the line here. And we need to keep a lookout for this. Very, very important, you keep an eye on this 200 simple daily moving average. And there is confluence of this coming down over here. And these levels that I'm going to give you now, the two main levels to remember, the reason why this level is important is because we found support at these levels here at the 18,200 mark. And I've already drawn the $12,000 mark here, which I showed you last week and many weeks before that. And that was due to the previous cycle where we found a lot of support at this level here at around about the 12,000 mark here. And when you look at this chart, you can see quite clearly that there is another level here which is still on the table based on these levels over here. So if you draw that line, that comes to around about the $10,500 mark here. So there are two levels at the bottom of this trend that we've got here at 12,000 and 10.5. And if I put the 8 EMA, once again, we got rejected right on the 8 EMA again. And it tried a few times there, and we've got rejected 3 times on there. Very important, this 8 EMA line. And just like over here, we do manage to get above it, but we don't seem to sustain it above this line at all. And it all becomes a fake out. So there will be another fake out or a permanent increase over here above the 8 EMA. But certainly we need to make our way to this $18,000 mark. And if we can recapture this, that would actually take the 12,500 off the table. And this would then become our bear market low. But it is a very big if, because I would be expecting here that we're going to get rejected. And then we'll see what happens after that. And currently we're in this actual channel here where we bottomed out at the 17.5, but the bodies of the candles were over here. Then we had this rally up to the 25,000. And since then, we've come back down, consolidated, tried again to get above this channel here. And we're now coming to the bottom of this channel. And that would provide good confluence of the end of the 60-day cycle over here. Because we would expect from this support line over here that with a higher degree of probability we'll probably bounce off here to create the next leg of the 60-day cycle. So there is a very good chance that we're going to have a bit of a brief rally up to here, maybe up to the 18,000, and that would be a relief rally from what's been happening down here. Okay, so we'll leave it there. That seems to be enough for today. I hope you found value in the video. And if you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.